on a real fireside chat, a true story about Toys R Us. Right? Amazon didn't kill Toys R Us. The greedy Wall Street profiteers killed it. And I put this up on Twitter. For those people that haven't seen it, the reason you haven't seen it is because it's for Twitter subscribers only. There's got to be some perks associated there. After 3 years, Elon finally got around to approving the subscribers for me on Twitter. I actually never thought it was going to happen. I never thought that they were actually going to go ahead and approve that, but they did, and that was kind of cool. Not that it really matters to me, but I just thought that was really interesting. I want people to know that the argument that Toys R Us was basically a aging dinosaur facing an Amazon asteroid, right? Amazon, the e-commerce company. It just doesn't. I know a lot of people are still unaware about that, but it couldn't overcome the overseer's burden of debt. The burden of debt that was imposed to them by private equity firms, and they obscured their role in the ruin of retail by hiding behind e-commerce and blaming this on Amazon. Toys R Us was purposely driven into bankruptcy after a leveraged buyout by these private equity firms. It was wild. It was absolutely wild. It was announced in the retail chain still held about 1/5 of all U.S. toy sales. Think about how much that is. They were doing 20% of all U.S. toy sales. Good girl. And it wasn't enough to keep them afloat. All right, princess. Down. Come on. Down. They were purposely driven into bankruptcy, period. I know a lot of people don't know about that, but Toys R Us was purposely driven into bankruptcy after a leveraged buyout by private equity firms left them with unsustainable debt, and they made it vulnerable to aggressive short selling that further depressed its stock price. In 2005, 3 Wall Street firms paid more than $6 billion for the company. But the reality is that only $1.2 billion came from their own pockets, and the rest was borrowed. Here's what happened, all right? Toys R Us needed cash to operate and roll their debt into the future. When Toys R Us was purchased, its new owners tethered that $5 billion of debt, plus annual interest payments of $400 million to its neck. Private equity firms were approached for loans. They made a deal that was win-win for them and lose-lose for Toys R Us existing ownership. Together, these 3 firms allegedly colluded to provide terrible loans that they knew Toys R Us was going to default on, but they had a plan. Their $1 billion didn't go to waste. Finance executives justify leveraged buyouts by claiming that they allow ailing companies to become leaner and more financially nimble in a way that protects its business and its workers. Those firms were then able to take massive short positions against Toys R Us to hedge their initial investment and also to turn a vast profit. And they knew it was going to be in the near future when Toys R Us went bankrupt. So they definitely had an inkling that they weren't going to be able to turn this company around in the way that they had hoped. After all, these private equity firms, they thrive on making and breaking companies. The end goal is to profit. It is not to save the company. So these deals favor the equity tycoons who help themselves to enormous bonuses, all right? And simultaneously, their new possessions, in this case Toys R Us, are left holding debt that they can't pay. An otter cracks open a clam before throwing away the shell. And so do these firms. Toys R Us new owners reportedly walked away with more than $200 million in bonuses, guys. $200 million after they bankrupted the company. And they walked away with these huge bonuses. So right there, they took back a nice significant portion of their $1.2 billion cash investment. But the thing is that these firms were able to share non-public information with their friends on Wall Street. And this potentially and allegedly insider trading together for more profits. So the PE firms together worked with Wall Street friends to short Toys R Us out of existence. What's up, my girl? Oh, who's a good dog? All right, get down, down. You know, full dog here. There you go. Stay. Good girl. It's my dog Willow. Stay. No, stay. She's like, what's up? I want to be on YouTube. Stop. Get off me. So these guys, they created these short the store campaigns to spread fear, uncertainty, and doubt amongst retail investors. And this should sound familiar to you guys. And they exaggerated a lot of little known details about the company, including some falsehoods, right, about the company via their legacy mainstream media outlets in order to scare retail investors into selling their shares. And combined with the increasing institutional short selling, this caused plummeting stock prices. If this sounds familiar, it should. The thing is, there's some things that make it different from other stocks on the market right now. Retail sold Toys R Us. They had no idea what was going on other than what they heard on the mainstream media. And nothing remained to prevent it from going to zero. Toys R Us, more than 800 stores closed down in the United States, and 30,000 people lost their jobs. And what's worse is that they notified their workers that their severance plans were being nullified. They got $0 for decades of loyalty and hard work. The private equity firms that lent the cash to Toys R Us reaped incredible profits from their short positions, and the securities sold, not yet purchased. They sold millions, if not billions, in securities without ever having to buy the shares to be returned to the market. This is literally naked shorting, and it's illegal. The thing is, the fines are just the cost of doing business. If they're even fined at all, if people are even stopped from doing it. Hey, Sweet Pea, can you stop screaming, please? Thank you, baby. So the firms never had to buy the shares, right? They sold shares that they didn't have, and they never had to buy them back to close their short positions. The private equity firms and their Wall Street friends that sold the stock short were able to keep all these profits without having to pay taxes on that money. When a company goes bankrupt and is delisted, shorts don't need to close their positions, and they don't need to buy back the stock. This prevents a taxable event. All right, ladies and gentlemen. So essentially and literally, these are tax-free profits for selling something that you don't own, for selling something that you haven't borrowed. This is illegal, but it happens every single day on Wall Street to a lot of companies, not just exclusive to Toys R Us. Let's put it that way. So the private equity firms at this point also own the rights to Toys R Us, all of it, all of their intellectual properties that were remaining, the name, the brand, the assets, the real estate after the bankruptcy. The firm was then able to open Toys R Us, reopen Toys R Us in America years later, using their newly acquired IP. So what you know now as Toys R Us is coming back isn't the same Toys R Us that you guys knew when you were younger, when you were kids. This is a Toys R Us that's owned by private equity firms. One second, let me get these dogs inside before they go crazy on the neighbor's dogs.
You scared me.
They scared you? It's all right. Come on, girls. Get in here. Let's go. Come on, Penny. Good girl.
Penny, I just got scared and your thing just flew off the table.
That's all right, sweetie. Would you mind picking it up for me, please? Thank you.
Mine just like feeds it out for now. Look at your picture. Why did it look like that?
What's the moral of the story? Right?
You
Oh, God, I knocked over. I almost knocked over my table, my gimbal, the phone, and everything.
They accidentally
The moral here is that these leveraged buyouts cannibalize jobs and embody that same greed that precipitated the Great Recession. Illegal naked shorting and insider trading runs rampant and has done for many decades. Fun fact, there are articles in the New York Times about Toys R Us being shorted very heavily in short and distort campaigns from 1984. 1984. That is how long this company was shorted extremely heavily by these firms before any of the debt, before any of the issues that they were having. 1984. Over a decade and a half before the company went bankrupt. Actually, 2 decades. Over 20 years before the company actually went bankrupt and had to shut down. There are articles in the New York Times from the year 1984 talking about the massive short and distort campaigns, talking about the amount of short interest on Toys R Us. This goes to show you how long and how prevalent these campaigns can be. The thing is that Toys R Us differs from some stocks that you currently know, right? It's important that the sunlight be shown onto these practices, or there will be many more American-made businesses that suffer the same fate as Toys R Us. And luckily for some companies like Gamestop, little-known companies like AMC, little-known companies like Tesla, and a few others, the prevalence of social media sites like X, formerly known as Twitter, Reddit, etc., YouTube, help facilitate retail investors' ability to decipher the truth from the FUD, from the short and distort campaigns, along with the emergence of readily available artificial intelligence, allowing people to not only hear the information faster, but work together en masse to figure out if it's true, if it's false, if there are profits to be had, if there are real dangers, or if they're just short and distort campaigns, right? So retail investors now own the majority of shares of stock in these companies, like AMC, GameStop, Tesla. And nefarious players can no longer sell their box, which is a form of market manipulation, in case you didn't know, and unlimited naked short these companies to force them into bankruptcy as easily as they once did to Toys R Us, to Blockbuster, to Radio Shack, and the list goes on and on and on. So to further facilitate retail investors' ability to separate the truth from fiction and these short and distort campaigns, my partners and I launched a tech company in 2021. It's called XCHANGE, and it's for the purposes of creating the world's first stock brokerage app created for retail by retail. And with AI enhancements, swarm intelligence capabilities, real-time discussion, and social media sharing, lit users will have the ability to disseminate information and act upon it faster than users on any other retail brokerage in history. And speaking of history, XCHANGE just made history as the world's first company to allow non-accredited retail investors like you to own a piece of the company prior to our launch and planned IPO, as well as receive many benefits exclusive to this pre-seed investment round. No other upcoming stock broker, no other upcoming stock and crypto broker has ever done this before, because this company is built for you, by people like you, for retail, by retail. This gives you the chance to potentially make significant profits upon our planned IPO instead of the Wall Street hedge funds. That's XCHANGE. You can check out the link down in the description. But this is what we're dealing with right now. And thankfully, retail investors, a lot of people have learned that, hey, if we own the majority of shares of stock, no matter how much companies want to short this company out of existence, they can't find the shares. They can borrow some, they can sell some short, they can even rehypothecate and create synthetic shares. But it won't be sufficient to completely eradicate the company, to completely send the company to zero. And that's what we've seen happen as retail investors have dug deep and entrenched themselves in companies like Tesla, AMC, and Gamestop. Tesla's already had its short squeeze. And if you will, it's having a resurgence on a secondary short squeeze. This isn't even the first or second. This is like the 30th short squeeze on Tesla. GameStop and AMC have already had several short squeezes, big ones, in which the companies have gone up 1,800, 2,000% in multiple occasions. Even as recently as May of 2024, we saw AMC and GameStop increase in value by over 500 to 600%. And that's just a minuscule amount of the real share price of both of these companies. For example, GameStop at this point has zero debt and over $4 billion in cash on hand. They are revamping their entire business structure and revitalizing the company into a new entity. AMC has paid off over $2 billion worth of debt in the last few years and has over $500 million in cash on hand and has significant net profits. A lot of people aren't seeing the net profits because the company is reinvesting in itself. It is spending millions and tens of millions of dollars on theater upgrades, on the customer experience, on better customer services, on new lines of business, like AMC Perfectly Popcorn, AMC chocolate covered almonds, chocolate covered peanuts, other snacks. And they now have partnership deals with Amazon, Walmart, Kroger, and the list goes on and on and on, where you can now find AMC popcorn, not just in your theater, but in your local retailer as well. The list just continues to go on. We had one of the best quarters here, and the best Thanksgiving in the company's entire 104-year history. It is continually setting new records, and the stock price in both GameStop and AMC are incredibly suppressed. And this is more of that same artificial thing that we've been seeing, that we saw with Toys R Us. Kelsey, hey, Sweet Pea, you all right? I gotta go break up a Christmas Eve fight, as you guys can see, as you can probably hear in the background, because even from over there, they're being pretty loud. So let me go break this up so we can have a nice Christmas Eve. I wanted to bring this up to your attention, but real quick before I go, I am going to check out. Don't come over here. Don't go get dressed, honey. Go get dressed. I am going to check out to see what you guys are saying on your YouTube comments, because I am really interested to hear if you guys have any input. Parker, that's enough. Oh, these comments are lighting up some of these short distort campaigns. No, go over there. You're not allowed over here right now. Yeah, Bandito Suavecito says, my son always does that when I'm doing something. That's always how it works out, my friend. They were perfectly happy, having a great time. They were watching movies, coloring, drinking, and having God knows what, in the other room, until, of course, the moment that I've decided to go live. It's like they can sense it. They knew that something was going on, so they had to come over and wanted to make a bunch of noise and play, and of course, be in the camera, which I'm opposed to letting them do that if they really want to come in here, but they have to be dressed. You know what I mean? They woke up, took off their pajamas, they're running around the house in their underwear. I'm not going to let them on YouTube because there's a lot of sickos out there. And
don't tell my dad that, okay?
They're being nice. They're cool. Merry Christmas, Yvonne. Typo negative. Thank you very much for your support. You are too kind. Steve, let's hope AMC does to the market makers what the market makers done to Toys R Us. Yeah, it's very much looking that way. They've lost billions of dollars on multiple occasions on AMC, on GameStop, on Tesla, on the SLV ETF, on costs, and the list goes on and on and on with these shorts. Argos Reed says, stay patient and calm, accumulate and accumulate. My friend. Yeah, Next Level Golf says KV Toys was awesome. I do miss that store. Eli Arnold, smart man. He says, F Bain Capital. And I think it's really fitting that in this case, much like the Batman villain, the firm, the private equity firm that shorted, well, should I say, not shorted, but excuse me, the private equity firm that was part of the leveraged buyout of Toys R Us and allegedly colluded with Wall Street firms and worked together and shorted Toys R Us in order to hedge their position, their $1.2 billion position, was named Bain Capital. And I'm pretty sure that you guys have seen the Batman movie in which Bane breaks into Wall Street and wants to rob Wall Street. One of the brokers tells Bane, there's no money you can steal here. And Bane's response was absolutely perfect in its eloquence. And he said, really? Then why are you here? That's the takeaway I want you to remember, folks. This is going to continue to happen over and over and over again until retail investors stand up and start working to do something other than the norm. Because sitting by and buying and holding is going to save one company. It might save two companies, three companies, but it's never going to stop unless you do something, unless we do something to change it. That's why we created LitXChange. Because if your orders are automatically being routed to lit markets, they can't be sent to the dark pools. Your trades can't be internalized by these wholesalers if they're not sent to dark pools. Your trades can't be front run by the market maker's hedge fund if they're not sent to the dark pools. And all of these firms, including Charles Schwab, Robinhood, Webull, and all of these other firms, are using payment for order flow in order to maximize their profits at your expense. Your orders and your trades are being rehypothecated, manipulated, and sold. You are being sold synthetic shares that don't exist. Then they fail to deliver. They front run your trades. They profit off you left and right like it's going out of style. And guess what? It's not going out of style. The only way we're going to stop this is if you actually support a company like LitXChange that has your best interests at heart. Because I can tell you, this isn't going away. This isn't going to stop. You have to stop it. I have to stop it. We have to work together to do that. Do you understand? Wall Street's not going to give up their massive billions and billions of dollars in profits simply because you don't want them to send your orders to dark pools or because you don't want your orders to be manipulated. It's never going to change. We have to change it ourselves. Happy Festivus, Brett. Cheers, my friend. WGBSFR. If you know, you know. Love you, Jana. Cheers, my friend. You guys are amazing. Brett says, if you go back and look at Bain Capital, Mitt Romney was basically in the entire deal. It was so shady. Even the liquidation sale was a complete scam to the market. Yes, Brett. Yes, you get it, my friend. You know exactly what I'm talking about. This was no little issue. They really, in my opinion, had no intentions of doing anything other than screwing over all the shareholders, maximizing their own profits. They had no interest in actually saving Toys R Us in the long run. None whatsoever. Meow Meow says, are you for or against T0? Let's put it this way. One of the head guys over at T0's name is Mark Cohodes. Mark Cohodes regularly speaks out calling retail investors names. Very, very poor taste. The company specializes in tokenized securities, which are used to steal. They're used to create fake share locates. They're used to manipulate markets. Mark Cohodes and T0 pretend to be pioneers, but the reality is they're much like the firm Robinhood, if not worse. come to your own conclusion. Merry Christmas, everybody. This is our time. Our time is now. Do something with it.